Peter McGuire is in neither of those camps. He's a CEO of XM Australia. Good to see you this morning. How are you?
Lovely to be here, Manus. Thank you.
Good, good, good. Let's talk about where we are. In theory, no deal is off the table.
Sure.
We don't know what comes next, but Goldman's have a note out this morning saying, look, we're inching closer to a softer Brexit. Would you agree with that, given the theatre we've had over the past 24 hours?
Well, I mean, we've got to see what happens today. The other side of it is, and yes, you can say it's going to be softer, but are we going to see May go to the other side and say, well, she's going to push it out further? Has she got support? And this is where I think she looks tired, she looks fatigued, and has she got the capacity to make something happen in the short to medium term? And I really don't think she has.
I mean, look, the physicality away. Let's have a look at the Brexit barometer. It's a long time since I've had the Brexit barometer up. We're back in negative territory. So there is a skew here. Do you think there's a risk that Theresa May gets ditched?
Yes, I wouldn't be surprised. I think that there's a very big chance, and the reasoning is quite simple. There's just so many moving parts to it. I don't think she's got support. Where does Corbin sit in all of this? And there seems to be no matter of support to her overall position, and I think she's, in a lot of ways, she could be dead woman walking.
I mean, let's face it, she has come back again and again and again. There's a stoicism, one could say.
She's one tough lady.
But there you go. Now, the other side of the coin is, yes, they might vote for an extension. Let's have a look at what Michel Barnier had to say last night. He said it could be a tactical, political prolongation. And this is what he had to say. I know the answers and the reaction from the EU side, the EU leaders, the EU Parliament. What for? Why do we need a prolongation? This is the risk, is that the House may vote for an extension.
Yes. But
there's not much appetite to be benevolent there from Europe.
No, none whatsoever. And this is the issue. As they've said, UK sorted out. They have to make it happen. And I think that where it's looking at the moment, there just seems to be so much uncertainty in the big picture. And that really creates, again, which is volatility from a trading perspective, what we've demonstrated in the pound.
Can I ask you about that volatility? Goldman Sachs have their note out this morning. A pound rally could get back to where we were 3 years ago in euro sterling. Let's have a look at euro sterling.
Yep.
I know that we have that stacked up. They reckon you could trade from 85 down to 80.
Sure. I would be surprised. And the reason is
what is it? Let's put that in context, because that would be back to where you were 3 years ago on euro sterling. They talk about a deal dividend, closer customs union. So what time frame could you see that kind of move from 85, 48 to 80?
I know it's an enormous move, but when you think about the other side, have a look at where the euro is. Euro weakness, there's so much uncertainty as far as their economy, and traders are going to stack this, and this is what's been demonstrated. You've only got to look at where the pound has been against the dollar, and it's going to be a trade on that. The opportunities are there, and I think you're just going to see massive, massive moves.
Would you stack up with options on euro sterling if you were going to trade that?
Oh, look, it depends on your risk profile. If you're trading straight futures or options, I think the retail sector is very much, they look at the leverage side of it and they see they might do some hedging, but the overall positioning is that they can enter a market very quickly and exit a market very quickly. They'll look at the fundamentals, they look at the technicals, and these people trade 24 hours a day. So they're glued to a screen, and they live and breathe a trading environment.
Exactly. They live and breathe the environment, and the brokers live and breathe on the bro. Peter McGuire stays with us. Peter McGuire is the CEO at XM Australia and still with us. Peter, so let's deal with the Chinese first of all. We have a number of the day. Let's have a look at the number of the day. It is 16 billion yuan. So pop. Bang went the industrial production numbers. This is the amount that's been flogged off by Chinese investors. Healthy profit-taking or something more malevolent?
You'd have to say it's probably healthy profit-taking. Think of where the market was on the 1st of January, where it is today. That market move was nearly 24%. It's extraordinary. This last 10 weeks, Manus, you can't underestimate. It has been one of the most volatile and profit-centric markets that I've ever seen. Equities, commodities. Have a look at what's happening as far as some of the currencies. It's been absolutely one-way traffic, and like any market, it exhausts to the upside, and it's a time to take some profits.
And what about the yuan? Because some people would say that data is a reflection of the slowdown that you had in the fourth quarter. It's just manifest reality.
Absolutely.
The fixed investment side of the equation is perhaps a little bit more heartening. But when you hear the language from the PBOC, what is that? How do you think people are positioning in terms of the yuan? for the next quarter?
Look, I don't think there's going to be a massive amount of move in it versus US dollar, but the other side, of course, is you're going to see some stimulus. They're not
going to over. Do you think that's going to be triple, or do you think maybe even there's a rate cut in the pipes in China?
You may see that. I'd say possibly, go to the third quarter. I think most of these global economies are looking at rate cuts in 19. I'm not sure how we're going to move as the Japan's, that side of it, and the euro. They're going to be under more pressure. But if you look at the States, certainly there's probably talk where you're going to see third quarter, fourth quarter rate cuts, and China will play the same game.
Do you think the US will actually cut rates before the end of the year?
I wouldn't be surprised. Absolutely.
One cut, two cuts?
I think one. I don't think we're going to see a rate rise. There's no way in the world. And whilst you've got this president in power and tweeting to, his heart's content, he's going to drive the Fed and drive them very, very hard. Jay Powell has got nowhere to turn other than a rate cut.
So if that's your scenario, take me through the dollar, because you've got a whole variety of views on the dollar. Goldman Sachs wanted to short the dollar. They got stopped out. But if you're saying maybe even a rate cut before the end of the year, is it too soon to short the dollar?
Too soon to short the dollar. The dollar's got the potential. US dollar index, I reckon, is going to nudge nearly 100. So it's sitting there at that 97-ish, 98 sort of handle, and it's got the potential to move higher from here. It's a bad house, the US, but look, it's not that bad compared to where the euro is. The euro's an ugly house. So 18 was a terrible year for euro, and it's only going to get a lot tougher in 19. And, and then the other side, of course, is where do equities play over the next quarter?
Well, let's just touch on that, because we've got a lovely story this morning, is that the bulls are getting boiled like a frog. I think that's perhaps a little bit disingenuous for it, but we have the S&P 500. It just failed to get through 28.15 a couple of times. And this is what people are saying, that is this potentially technically an exhaustion? Or maybe let's flip it around. What does it take for you to get up and over 28.15? Does it take that rate cut?
Well, have a look at that market. Let's go back to the start of January and look how that moved to the upside. It's just absolutely parabolic. You don't see that many times in a short period of time, as far as there was a big sell-off, as we saw from September all the way through to December, and then it's been strong. Now, as far as 28.15, it's only a number. I think it's going to get there over the next week or two. I wouldn't be surprised even sooner. There's a little bit of uncertainty. What's happened as far as the Brexit issue globally? Where does Trump play with China as far as trade? And the uncertainty with North Korea. That seems to be taken off the handle at the moment.
Yeah, I mean, look, we can only deal with a certain number of topics in any one day. We're journalists. I'm obsessed by this chart, and I'm absolutely determined we're going to play it. Tips me up. We're almost at 2%. Now, I'm surprised, because I look at CPI, I look at PPI, and everybody tells me I should be disappointed with CPI and I should be disappointed with PPI. Why is two-year break-evens, why are the tips rising to nearly 2%? That says to me there's a bit more potential for inflation.
Well, possibly yes. And crude prices and energy prices, they've had a very strong move, and that could be having some form of effect.
Yeah.
Like it or not, we do like to see some inflation across all markets, but at the present time, it's been very subdued. So maybe we do see a little bit further move to the upside as far as bond markets. Again, it's a bit of an unknown. I'm going to sit on the fence on that one, because whilst it edges higher, have a look at 10-year, also look at US dollar. I think it's just going to flatline.
I mean, the 2 years are flashing to me something more interesting. They've not really nudged that much higher, so the world is still a little bit concerned, yeah?
Yeah, absolutely. Okay. They're very much concerned.
Peter, thank you so much. Peter McGuire, my guest host this morning, CEO of XM Australia. Thank you very much for being with us.